Welcome to The Explainer. Today, we're going to unpack the incredibly complex and, let's be honest, often contradictory story of the Toronto and GTA housing market. After years of just relentless, upward growth, the whole landscape has fundamentally shifted. It's left buyers, sellers, and homeowners just kind of wondering, what on earth comes next?
All right, let's just dive right in with the single most important number you need to know to get what's happening. Home sales in Toronto have recently hit a 25-year low. I mean, think about that. The last time the market was this quiet, we were all just getting used to writing the year 2000.
And to put a finer point on it, total sales last year, they fell by a staggering 11.2%. It is, without a doubt, the quietest the market has been since the turn of the century. And that kind of slowdown, well, it completely reshapes the whole dynamic of buying and selling a home. So the big questions are, how did we even get here? And maybe more importantly, where are we all going? In this explainer, we're going to explore the big chill that's settled over everything. We'll unpack the reasons for this massive slowdown, and then we'll look at some of its really surprising ripple effects. After that, we'll examine the dream for a home that's still bubbling under the surface, weigh some pretty conflicting predictions for the future, and finally, build a playbook for navigating what's next.
Okay, so let's start by looking a little closer at this big chill. It's not just one thing, you see. It's really a combination of trends that have come together to put this once fiery market, well, basically on ice.
Now, what's really fascinating here is how these numbers play off each other. So sales have absolutely plummeted, right? But at the exact same time, the number of homes being put up for sale has actually jumped by over 10%. You know what that means? More supply, less demand. And that has led to the average selling price dropping by nearly 5%.
And that right there, that's the big consequence of this whole dynamic. The absolute frenzy is gone. The power has actually shifted away from sellers. It's created a market that is way more balanced and, a lot more favorable to buyers than anything we've seen in a very, very long time.
So why? Why did the market cool down so dramatically? Well, the answer isn't some single event. It's more like a series of really powerful economic headwinds that all gathered into a kind of perfect storm. On a high level, households are just feeling the pressure. There's this broader economic uncertainty, worries about job security, the rising cost of, well, everything. All of it has made people pause and think twice before making the biggest financial commitment of their lives. Confidence is just such a crucial ingredient in any housing market, and right now it's in pretty short supply.
And look, this isn't just a feeling people have. It's backed up by the data. The country's unemployment rate recently climbed to 6.8%. And a rising unemployment rate, that means less job security, which directly hits the confidence and the financial ability that people need to go out and buy a home.
But the biggest factor looming over this entire market is what experts are now calling the mortgage renewal wall. This is arguably the most significant economic challenge facing Canadian homeowners today, period. This looming wall has led some market analysts to issue some pretty stark warnings about the immediate future, with a real focus on the financial strain they expect for homeowners right here in Ontario who are staring down this renewal cliff.
So here's the essential problem. A massive wave of homeowners, we're talking about 60% of everyone with a mortgage, is facing a serious payment shock. See, they locked in mortgages at historic lows, sometimes below 1.5%. Now they're looking at renewing at rates closer to 4%. That jump can mean hundreds or even thousands of extra dollars in monthly payments. That's a huge strain on household budgets and could even force some people to sell.
Now, a slowdown in home sales like this, it doesn't just happen in a vacuum. It creates these powerful and sometimes really unexpected ripple effects across the entire housing world. And that has led to a tale of two very different but totally interconnected markets, the for sale market and the rental market.
So on one hand, you have the sales market, which we've been talking about, defined by cooling prices and super low activity. But here's the shocker. The rental market is also seeing prices fall for the first time in years. And believe me, that is not a coincidence. It's a direct result of what builders are being forced to do.
Okay, what's so fascinating about this slide is just the sheer scale of the shift. Asking rents in Toronto have had their sharpest annual decline in 4 years, dropping by 5.1%. This proves that the chill from the ownership market is now spilling over and cooling down the rental side too.
And this, right here, this brilliantly illustrates how it's all connected. The deep freeze in the condo sales market means developers are really struggling to hit those pre-sale targets they need from the banks to get financing for construction. So what do? To keep their projects alive, they're making a strategic pivot. They're converting buildings that were supposed to be condos into purpose-built rental apartments. And this sudden flood of new rental supply is exactly what's causing asking rents to fall all across the city.
But just when the whole outlook seems completely chilly, there's this powerful counter-narrative building just beneath the surface. It's that persistent, unwavering dream of homeownership, and it's being kept alive by one key demographic in particular.
Yeah, despite all the economic uncertainty, buying intentions are surprisingly strong. A recent survey shows that one generation is pretty much leading the charge, and by a really significant margin.
That's right. An incredible 1 in 4 millennials are still actively planning to get into the market. Now, this isn't just some small group. This represents a massive and growing pull of pent-up demand just waiting on the sidelines.
So why are they so resilient? Well, compared to younger generations like Gen Z, millennials are just more established in their careers. They usually have more savings, greater financial stability, and all that positions them to better weather the current economic climate, and frankly, to take advantage of any opportunities the market gives them.
So you have this tension, right? This push and pull between a frozen market on one side and this huge pool of simmering demand on the other. And it brings us to a fork in the road. It's led experts to offer two very different and totally conflicting visions for the year ahead. So which path is it going to be? Well, the optimistic case argues that years of pent-up demand combined with stable interest rates are going to fuel a really strong rebound, especially this spring. But the pessimistic view, well, it holds that rising job losses and the full impact of that mortgage renewal wall will lead to a continued correction, with prices falling even further before they finally bottom out.
And this really gets us to the central question that's going to define the market's direction for the next few months. Is the sheer force of all that demographic demand from buyers who have been waiting for years, is that strong enough to overcome the very real economic fear that's gripping households all across the GTA?
So what does all of this actually mean for you? Let's try to distill this whole complicated picture into a practical playbook for navigating what comes next.
For potential buyers, the message is really one of cautious opportunity. With prices stable and interest rates looking favorable, this is honestly a better time to buy than we've seen in years, especially if you're planning to live in the home for the long haul. The key is to be prepared. Get your financing all lined up, but you also have the luxury of time to find the right place without feeling like you have to rush. Okay, and for sellers, the key takeaway is that realistic pricing is everything. This is a balanced market now, which means you don't hold all the cards anymore. Overpricing your home, it just won't work. The best strategy is to get your property ready now so it really stands out, and then price it competitively to attract that wave of buyers who might just be entering the market this spring.
Regardless of your position, buyer or seller, these are the 3 key things everyone should be watching. The number of new listings, that'll tell you all about supply. The employment data, that's your signal for buyer confidence. And, of course, interest rates will dictate affordability. These 3 metrics, they're going to be the first signs of which direction this market is truly heading.
So ultimately, we're in this moment of equilibrium, this really tense standoff. On one side, you have the unstoppable force of a generation of buyers who are so eager to own a home. And on the other, you have the immovable object of economic anxiety and real financial strain.
And so, we're left with the defining question for the Toronto housing market. In this epic tug-of-war between the powerful, persistent dream of homeownership and the chilling reality of economic fear, which force is ultimately going to win out? The answer to that question will shape the financial futures of millions of people in the GTA, leaving all of us to watch and to wait for that tie to finally be broken.